Welcome to Market Peeker. Today, we're breaking down how to analyze Forex charts effectively so you can spot trends, make better decisions, and boost your trading confidence. Let's get started. First, start by choosing the right chart type. Most traders use candlestick charts because they provide clear information on price movements, including highs, lows, and trends at a glance. Next, identify key support and resistance levels. Look for areas where the price has repeatedly bounced or stalled. These zones often signal potential entry or exit points. Then, use a couple of indicators to confirm trends. A moving average can help identify direction, while RSI or MACD can show momentum or potential reversals. Keep it simple to avoid overloading your chart. Finally, zoom out to see the bigger picture. Check higher time frames like the daily or weekly charts to understand the overall trend before zooming in on shorter periods for precise entries.